This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. Welcome, everybody. This is the Definitely Uncertain podcast. My name is Darren Rockman, and I'm a partner at Goldrock Capital, the 21-year-old multifamily office servicing families of wealth in Israel and around the world. And today, I am very pleased to have Zvi Schreiber, Dr. Zvi Schreiber on our podcast. Zvi and I have known each other for longer than we care to remember. Hi, Zvi.
Hey, good morning.
Hey, good morning. How are you? So by way of introduction, Zvi is a serial entrepreneur. He has started a whole list of companies, including Tradium, which was acquired by VerticalNet, Unicorn, that was acquired by IBM. He was CEO of Lytec, which was acquired by General Electric. And today he is founder and CEO of Freightos, an Israeli tech company that has created a digital booking platform for international shipping. And apart from all of that, he has a PhD in computer science and is the author of Fizz, A History of Physics. And most recently, his latest book just came out, and that is Money Going Out of Style, The Story of Money and the Mystery of Its Decline. And this brings me back to a conversation that Zvi and I had probably 25 years ago. I have a degree in economics myself, and he said to me, tell me, what's money? And of course, I was completely unable to give him anything close to a reasonable answer. So he's gone on and written a whole book about it. So Zvi, tell us a little bit about, firstly, why it is that you decided to write the book. And I hope it's not because I couldn't give you a good answer.
Well, Darren, it wasn't specifically because you couldn't give me a good answer, but it was because it was very hard to get a good answer in general. I also timed the publication of the book to the 50th anniversary 1 week ago of the end of the gold standard. So in August 1971, exactly 50 years ago, President Nixon decided that he no longer cared to back the dollar with gold. And shortly after that, the pound and the franc and Deutsche Mark at the time, basically became unlinked from gold. So money is 50 years old as a fiat currency, as something which is not backed by a commodity. And so it's become fairly amorphous in the last half century. And I never got a really good answer. What is it? So I ended up doing a lot of thought experiments about it. Imagine we were, I was sort of on a desert island, and we started bartering, and then we. So I did these thought experiments, which I put in the book, to just try to really understand fundamentally what money actually is.
Right. And did you get an answer?
Yes, I think I did. There's a lot of complexity because money is used for different things. But yeah, fundamentally, it's tokens. Fundamentally, the world, people want to barter their labor for goods and services. So at its most fundamental, money are tokens which allow people to swap their work, their labor for receiving goods and services. And so it's a kind of a unit of debt in a way, because you did some work, so then the company gives you a salary, and that means you're owed goods and services. And then you go and spend that money and you receive the goods and services, and then someone else so the company who received that money is then owed work. So it's basically keeping track of who's owed work and who's owed goods and services. That's at its most basic, but there's a lot of complications around that as well. But that's my basic simple answer. Yes.
Right. Okay. So your book implies that money is facing a midlife crisis. What do you mean by that? And we're both in our early 50s, so maybe we know what you're talking about.
Yes, being experts on I may not know a lot about money, but I know a lot about midlife crisis. So,
well, that's your next book, right?
So yeah, but I mean, what I meant by that, if you think of money's 50 years, it actually went through, I would say, 3 phases. So in the 70s and early 80s, there was the hyperinflation. So what happened is the dollar was no longer linked to gold, and it became very tempting for governments in America and Europe, around the world, to print money. And so they said, we can print money now. So they printed money. So, and then there was, high inflation, in some cases hyperinflation. So then they sort of created the central banks to control that. And then we had maybe 3 centuries of stable growth. The money supply sort of grew with the economy. The prices were fairly stable. But since 2008, something completely different has happened. The Fed and the other central banks are printing money in tremendous amounts. And it's not driving inflation this time. I know there's been a bit of inflation, but compared to the amount of money being printed, there's very little inflation. But it's not driving growth either. There's a little bit of growth, but the amount of money being printed is huge. So just to give you some numbers, the quantity of dollars has increased from going into 2008, there was $1 trillion of cash and cash equivalent circulating, and today there's 6 trillion. And now the economy has only grown 50%, in that time, but the money supply has grown 500%. And what that means is that the vast majority of all of that cash is just not being spent. It's not circulating. And indeed, the velocity of money has gone down from before 2008. Each dollar was spent, salary and shopping, 10 times a year, and now it's about once a year. So when I say going out of style, I'm saying that most money is no longer being used for its primary purpose, which is buying goods and services.
So what's it being used for?
Well, I think it's being used for buying shares in cryptocurrency. So instead of getting inflation, what used to happen when you had too much money is you got inflation of goods and services.
Yeah.
You have inflation in the supermarket, if you like, but now we're getting inflation in the stock market instead. So people are chasing up the prices of shares, chasing up the prices of real estate, chasing up the prices of bizarre crypto assets. Which I think is maybe less helpful, but I think that's what we're getting instead. Yeah.
Right. So asset price inflation rather than goods and services inflation, and of course, a large part of that's been driven by the fact that a lot of that money's actually been injected into via the purchase of assets. So rather than governments just printing money and then handing it out for people to lend, or for banks to lend out, they're actually going in and buying assets with them. And that, of course, has been part of the what's kicked off this huge increase in the value of all assets, really.
Yeah, I think that's right. And I also tied in the book to the issue of inequality, which has become more extreme over that time period. And I think that's becoming actually an economic issue. Put aside the social issue, but just from a pure economic perspective, I think if you print money and you give it to someone who's wealthy, then they're probably not buying extra goods and services with that. They're investing in the stock market or in other assets, which is fine, but it doesn't create actual jobs. And then if more of that money was going into the hands of people who are poorer, they were more likely to buy goods and services, which drives actual job creation.
Right.
So I do think that inequality may be getting to a level where it's creating an economic issue in that respect.
In what sense is that now an economic issue? As the social implications are of and stability, political instability. There are all those. But what are the economic implications as far as you can see?
I think the economic implication is that if too much wealth is going to too few people who already maxed out in the goods and services they want to consume, day to day, then you actually have not enough goods and services being consumed, and then you end up in unemployment. Now, the way that the economy is adjusted for that is by having the crazy interest rates. So interest rates have been virtually zero, but real interest rates, once you adjust for inflation, real interest rates are well below zero. And you get this bizarre situation where, Siemens is borrowing money for less than zero. You can get a mortgage in Europe
in inflation-adjusted terms.
No, in actual terms.
In absolute
actual terms. And then if you take it at inflation adjusted, it's even more extreme. You can get a mortgage in Europe for less than zero in nominal terms, and in inflation terms, it's -2, -3%. And Toyota borrowed money. Their interest rate was 1 yen for every 10 billion yen they borrowed. I mean, insane. And again, when you adjust for inflation,
and of course they couldn't find that 1 yen, which was a bit of a problem.
Right, so, and again, as you say, once you adjust for inflation, these are all negative. So it's actually a kind of a workfare where we're actually subsidizing Toyota to buy a car, to build a car factory, or subsidizing Siemens, or Google also borrowed money for in America, it's just above zero nominally, but again, to your point, inflation adjusted, it's negative. So we're actually, society is actually subsidizing loans for building factories that may not even be profitable. And that's probably maintaining employment in the meantime, but it's not necessarily a sustainable situation. So that I think is the ironical economic situation that we're creating.
So what you're describing essentially is a bubble in asset prices that's been generated for real reasons. Or, I had a conversation recently with a senior accountant, and he asked me why I thought he should invest at current valuation of the stock market, and I said to him, well, because the alternative is holding a depreciating asset, which is your currency. How do we get out of this? How does the world reverse itself from the position in which we've now put ourselves, which is, and look, let's also give some credit to the central banks that have done this, which is, on 2 occasions in the last 15 years, we were at the brink of, an existential crisis in economies. And, with having learned the lessons of sort of the early 20th century, they were trying to avoid mass depression, and did so by flooding the world with more currency than literally we knew what to do with, as you've described. So
I agree with that. Yeah.
So all of this, we can sit here and it's all fine, but nobody was picking up all calls off the streets to satisfy a hungry belly over the last 15 years. We have to recognize that as well. But how do we get out of it?
Well, that's a great question, and I think you're right. I think the central bank saved us twice. But really by a very extreme amount of printing money. So I think I agree with your question. I believe that the central banks have to, I believe it's very dangerous having so much cash floating around, which right now isn't driving inflation, or it's driving a bit of inflation, but not hyperinflation. But we never know when it starts to drive hyperinflation, and it is driving asset prices, which are also risky, because asset prices can burst, obviously. So
they can burst, and also they do have an impact in the real economy, particularly when it comes to housing.
Yeah, absolutely. So a lot of people can't afford a house because it's so expensive, and agreed. So I do believe that they have to gradually wind down the money supply. And even if that brings share prices down, try to do it as gradually as possible so it doesn't create any sort of bursting. And I do believe that it's come to the point where economically there's a need to moderate inequality. Many people would disagree with me, but that's what I see in the numbers.
Right. You mentioned Bitcoin before. So give us your view on Bitcoin and how that fits into this this overall picture that you're painting.
Well, Bitcoin is interesting. I've written a paper about blockchain. It's something I've looked at a lot. I think, first of all, it's absolutely brilliant. The intellectual achievement of creating a currency which has no centralized ledger, and nobody behind, no organization, managing it, and yet is stable and in certain stable in the sense that it doesn't, crash, not in the sense of the value which is not stable, is an incredible intellectual achievement, and I understand why people got very excited about it. However, as a currency, it's completely unfit for purpose, for 3 main reasons. The first reason is that, sort of related a bit to what we discussed before, the money supply doesn't respond at all to how much usage there is. So the amount of Bitcoins is increasing gradually, and for some strange reason in 21 something, it's going to actually freeze, which is a terrible thing for a currency to have a completely static money supply. So I've got no idea why Satoshi Nakamoto, whoever he or she was or is, why they did that, but that makes no economic sense. So it's brilliant computer science project.
It's worse than the gold standard, because at least in the gold standard there was more gold being created.
You could find some gold, right?
Yes,
or you could do partial reserves, or So that's very bizarre. That's the number one problem. The second problem is purely technical. So that's an economic problem. There's a purely technical problem, which is that because all of these miners have to reach consensus of every transaction, it's actually incredibly slow and expensive. People don't realize that there's only 7 transactions a second on the whole Bitcoin network. That's nothing. Visa's doing 10,000 transactions a second or whatever it is. And therefore, the cost of the transaction is actually very expensive. Sending Bitcoin is not cheap. So there's a serious technical problem, which is the one I looked at in my paper. And then the third issue, of course, is environmental. As you probably know, Bitcoin is taking more electricity than Switzerland
yes.
for no reason, just intentionally designed to burn energy in order to make it prohibitively expensive to hack it.
Yes.
But the environmental cost is just totally unjustified. I know you don't believe in global warming, but
I didn't say that. Slightly misquoted. Yes, but we won't get into my beliefs around the environment. That's a different podcast.
But anyway, I think that this may be. There's a risk, let's say, that all of this energy is not doing us any good.
Just on that particular point, my question is a cost-benefit analysis on the solution, but that's a separate discussion. But of course, one of the things that I think people miss around the cryptocurrency discussion, not specifically on Bitcoin, which was my question before, is of course there is no end to the number of cryptocurrencies that one can create. Yeah. So when you think about limiting supply. And limiting supply, obviously, in a currency has its advantages and disadvantages. We just talked about some of the disadvantages of endless supply of currency. But of course, if anybody can create yet another IOU, which is what Bitcoin effectively is, it's a form of currency, then there is effectively no limit to the supply.
Yeah, in theory, that's right. But in practice, for your currency to be worth anything, you have to have a consensus that this is a valuable asset. And there's a limit to how many things people can keep in their mind. So in 2019, there was all these ICOs happening, many a day.
Yes.
And they've all gone by the wayside because nobody can keep track and value thousands of different currencies. So yeah, of course, anyone can invent a currency, a cryptocurrency, but I think there's a limit to how many currencies are going to get some kind of market consensus that this is worth something.
So what do you see happens to the cryptocurrency world?
I think it will. Well, it's difficult to predict the future, but I think, of course, central banks.
Not putting you on the spot or anything,
Yeah. Look, there are different things within that sort of world. So, Bitcoin has the problems I said. Other cryptocurrencies like Ethereum are trying to solve some of the issues and become more efficient from a speed and from an energy perspective. So I think that that's good. And then there are all these stable coins which actually have some backing, so they actually have a stabilized value. Although now the regulators are worrying about who says it's stable and is it really backed, and so there's a lot of questions around that.
Yeah.
And then of course the central banks are starting to launch their own digital currencies. So I think the jury's out. I think the crypto world is slowly solving some of its problems. The central banks are trying to get in to the game, and actually, I'll say this: if you look at central banks having digital currency, if you look at open banking, I've seen open banking up close in the UK. It's incredible. You get instant transfer. It's free. It costs a few p. Instant confirmation from any bank to any bank.
Just explain what open banking is for those who don't know.
Yeah, so open banking is a standard which I think the UK are the leaders, but other countries are doing it as well. The UK has told all the banks they have to have an open API, an open electronic connection, where anybody can connect to them and check balances if they have the account holder's permission and make transfers if they have the account holder's permission. And that works very well in the UK. So you can, if you want to check out on your website, not using Visa, but using a bank transfer, you can redirect the user to any UK bank. They can make the transfer to you. You get instant confirmation. It costs virtually nothing. Instead of paying Visa 3%, you have an instant transaction. And that really is, in the end, the pound is a digital currency, right? Most uses of the pound and the dollar are digital. So the differences between fiat government currency and cryptocurrencies aren't as big as people think, because the government currencies are becoming more and more digital. Transfers are becoming more and more instant and cheap. And it may be that because of that, the crypto world sort of loses its edge in a way.
Right. Which actually solves one of the other problems of cryptocurrency, which is not a problem inherent in the currency, but for regulators and for governments who want to maintain control over their money supply, cryptocurrency posed a huge challenge. And this effectively answers that challenge.
Yes, and related to that, of course, privacy and law enforcement. So
yes.
Another big problem.
Because, of course, Bitcoin is largely used to fund transactions which otherwise regulators wouldn't, or various regulators wouldn't be happy
it's largely used for crime. But it's actually.
And by the way, and AMC allows you now to buy movie tickets if you want to go to a theater.
Yeah, that's sort of fascinating. Since they've become a meme stock, they decided they should tie themselves
to why not?
Cryptocurrencies. So anyway, but the privacy is a two-sided problem, because if nobody knows if nobody identifies me with my wallet, then I've got complete privacy, even from the law enforcement. But if I ever actually buy some popcorn, then AMC know what my wallet is, and then I've got zero privacy. From then on, they can see everything I do.
Right.
So you've got this binary, either total privacy or no privacy whatsoever, and whereas what we want is something in between.
Right. So you're either a hermit or big brother in the cryptocurrency world.
Something like that, yeah.
Okay. When you sort of look at the midlife crisis that you described for money, how does that midlife crisis sort of progress from here? So we've moved to the point where there is this inflation, potential inflation problem, and I think we're sort of in we're at a sort of strange moment where the deflationary forces are huge and the inflationary forces are huge, and for some reason they're sort of keeping one another in check. The deflationary forces that have been created by technology and globalization and the dropping of trade barriers, some of which is being unwound, and on the other hand, the inflationary forces generated by this massive growth in the money supply. So they're in sort of keeping each other somehow in check over the last decade and a half. So then, and there is an interest on behalf of central banks for there to be some inflation, because it reduces the absolute, or the size of the real debt of governments, and governments are running very large deficits and have accumulated very large debts. So how do you see things sort of progress? Those two forces progress from here.
I have learned not to predict the future, because.
Oh, I'm putting you on the spot again.
Well, that's fine, but I think I'm going to sort of avoid it, because, nobody could possibly have predicted that the money supply would increase. Let's say the US-based money would increase from $1 trillion to $6 trillion without hyperinflation, and nobody expected that. It's against all the textbooks since Milton Friedman. All the textbooks said that would lead to hyperinflation.
And funnily enough, it only happened because in 2008 they went from, I think it was 200 billion or 300 billion to $1 trillion in a very short period of time, and then they realized, hey, actually this works. Nobody died. Hey, we can do this ad infinitum.
That's exactly right. Yeah,
and everybody thought that was the big move, not realizing that it was that was just first course, and the main course was yet to come.
Yeah, I listened to a podcast with one of the heads of the Feds. I forget which one, St. Louis or one of them. And he was sort of saying, look, but we've been printing money, that we haven't had much inflation. This was before the last 2 months, but even the last 2 months, it hasn't been that, hyper. And he said, we're just going to keep printing money and sort of see what happens. So no one predicted that. And I don't know what happens next. But I do know that it's a very unstable situation. Inflation could suddenly come back, and then they're going to suddenly raise interest rates, and then the asset
and then the game's up for assets. Yeah.
That's going to be very, kind of scary. So I'd rather they start, which I think they're doing, but they need to preempt that.
Yes,
and reduce the money supply somehow.
Well, it's actually interesting because, of course, one of the things you talk about in your book is that one of the key elements of money is its stability, right? And that you can sort of believe that unlike the sort of Zimbabwe situation where you have to take a wheelbarrow one day to the shop, and the next day you have to bring a truck, and the next day you have to bring a semi-trailer because money's just dying in value. So of course, one of the issues is that this printing of money is potentially undermining all of that. And I think it's something that's kept investors, really worried, and anybody that looks at the macro really worried. But I think we've also taken the same view as the St. Louis Fed president that you mentioned before, which is, well, it seems to be working for the moment. So, we'll all just sort of stick with the game and hope for the best.
I'll mention just one more thing tactically, which is in my day job, as you mentioned in your kind introduction, I'm CEO of Freightos, so we're a digital shipping platform. And I can confirm that there are some purely short-term inflationary pressures right now, mainly because of there's a big shortage in shipping, in ships, and the price of shipping. We published the index, the FBX, the Freightos Baltic Index of container shipping prices, and it's up hundreds of % on last year, and most goods are imported. So so I can confirm that there's some very specific tactical things which are creating inflation in goods right now, which will be transitory because they will build more ships. So
well, they will build more ships, and also there are supply chains which have been starved because of the lockdowns last year, and maybe lockdowns now, and a lot of that demand is really just filling gaps in supply in warehouses around the world.
Yeah, potentially, but I mean, actually, retail is breaking records. But I guess the other interpretation is that as services come back, people will spend more on travel and restaurants and less on goods, perhaps. Yeah.
Also, yeah. Okay. Well, for those who were fascinated by this conversation as I was, you can do what I didn't and go to Amazon and buy the book. It's Money Going Out of Style by Zvi Schreiber, and I highly recommend it. And I intend to buy it for a couple of people that I know as well, because I think it's a great introduction to this whole topic of money and the macroeconomy and what it all means, and help you understand better the world in which we live, as complex as it is. So thank you very much, Zvi Schreiber.
It's been a pleasure, Darren.
It's been a pleasure. Thank you very much. Look out for more episodes of the Definitely Uncertain podcast. If you want to send us any ideas for shows, you can send it to podcast@goldrockcap.com. You can get us on YouTube and SoundCloud and anywhere you get your podcasts. Thanks, everybody, and see you next time.